Good morning, traders. Paul here with Gamma Edge. Today is Friday, the 16th of September. Let's get started. Pause your players. You know the drill. Read to the bottom. If you agree, hit the play button. Summary for today. Market model is cash short. So everything is enabled. We reversed a couple days ago. Do not ignore signals that turn off, period. Of course, this all refers to paper trades and nothing else. The wing charts continue to show a bearish stance. They are growing slightly on the cumulative put side of the equation. What this means is basically we are seeing some downside short-term gamma going in, but in general, the growth of the put side is not dramatic, and the call side is flat. The zeros of the complex are still divergent. Taking a look at the SPX AM, and I put some notes in the Discord on this morning. There's still an upward positive trajectory. Everything else, the SPX PM settled, the SPY, the Qs, the IWM are all downward sloping, and we'll see that here in a picture in a little bit. But we interpret that the downside demand of the monthlies, which is the SPX AM, is light compared to positioning for Q4. So, take that for what it's worth. We're not seeing a lot of downside panic or demand. 3,800 has become negative GEX. We were actually talking about this all week. It happened, we thought it would happen after the close today, but as it turns out, the SPXP is not strong enough to pull that up. So 3,800 has now become the new line in the sand to the downside. The goalpost to the upside is 4,400. It's incredibly weak. Everything above us is weak, so just be aware of that. Part of that obviously is gamma or spot price moving down, but part of it is just that we've seen a lot of calls get monetized, which has pushed us down. Of note, below 3,800, we're not seeing any significant growth in gamma relative to what we're seeing at 3,800. We think this is indicative to partially the roll of the monthlies out to October and beyond. We also think that there could be complacency in the marketplace, so just be aware of that. If we lose 3,800, we see a pretty slippery slope of illiquid levels all the way down to 35.25 and below. There's just nothing below 35.25, although you'll see some lines here going in. So as I said, with the market model, we reversed up here a few days ago. We alerted everyone to that, of course. Protect your profits. This is clearly risk off, more risk off. Our mode of playing here is to sell the bounces, and that's working out well right now. So make sure you understand this. If you have any questions, come in the Discord and ask questions, please. Looking at the day over day, as I said, we're seeing some minor upgrades on the put side of the equation, short-term gamma on the put side. The cumulative calls are relatively flat. They're not really changing, so that's important. I want to draw your eye up here. 3350 on the SPXP. This is the PM settled, not the AM settled. AM's here. Why this is noteworthy is we've never seen a put open interest level this far low. Now I know I said just in the earlier slide we're not seeing much below 35.25. That's true. This is a small amount, only 93,000 contracts, but it's noteworthy, and we're looking into that data. I can guarantee that 37,000 contracts are long, so these are long puts. I can also represent that about 9,000 of these contracts are short. So a little bit of offsetting there, but the balance is currently from our analysis is showing that it's midpoint trades, and directionality on midpoint is hard to ascertain. The OI, for the first time, and you can go back and take a look at December here, for the first time we're actually seeing some of the roll push out on the call side and not the put side. Now, the magnitude of the major divisions matters. But when you click on the charts that generate this, and you can do that in the Discord, you can hover over these levels and you see exactly the call contract structure and the put contract structure. So you see what's going on. You also see the distribution if you click on this chart, and that'll open up what's needed there. So just be aware that we are seeing in the final completion of the SPX roll, we are seeing some calls go in for December. But sure, the short-term puts going in are dominating. You can see that distribution down here. This is what I was talking about, the complex zeros. We've got just these downward slopes that are occurring in the SPY, Qs, IWM. The SPX which is the monthly, it settles at the open this morning. So this contract today is no longer valid, not tradable. The opening price at 930, 931 will be the settlement value, and that will be used. And now the October contract is relevant. That has the propensity to drop gamma because obviously we're moving a month away. But delta, you can see, is on a clear uptrend. So we've got this divergence that's going on. We want to continue to pay attention to this. This is normally what we consider a hedging structure. The SPX AM settled, these are the monthlies, and the fact that we're continuing to see an upward march here in the spot invariant values of true gamma zero and true delta zero tells us that there's just not a lot of panic to the downside, and there could be positioning for Q4 to move up. We'll have to wait and see. Note we're above these levels, whereas we're approaching these levels to the downside. You can see what that means in terms of history. Taking a look at the key levels for today, 4,400, 3,800, as I said, 4,000 remains. Kind of that illiquid COI, POI coincidence, which we've had forever. We are seeing some positive deltas develop below us, the 3750 strike and surrounding areas. Most likely a lot of that is due to some short puts that we're tracking down there. I haven't looked specifically at this strike, but in general, we have some positive deltas that are rearing their heads down there. You can see we have a lot of overhead levels on the SPXP, whereas we're jumping in the century marks pretty much on the SPX, on the AM settled, and the this is the combo, but these dominate, the monthlies dominate the conversation over here. The 0 DTE for today, fairly strong on the PMs. Again, it is the monthly expiry. The AMs, which are not indicated here, expire at the open, or not expire, settle at the open. A couple things to be aware of. 38.25, you can see it, we pushed down. Moneyness really flips in the 0 DTE equation below 38.25, roughly SPY 382, 383. Be aware of that. If we drop below that, we've got a lot of gamma sitting down here in the 0 DTE, and so SPX is not necessarily compelled to monetize, but the SPY, the Qs would be, and that could actually cause a drive upward. So how we position for the day will be important. To the upside, you can tell it is weak. So if you just take the yellow line at the close, you can see we have downside, the same equidistant to the upside. We're basically flat. We're balancing back and forth between the puts and calls. So it's a real battle overhead to the downside, pretty clear on the put dominance. So be aware of that. The combo, which is the AM plus PM. Now remember, AM is October because we are settling out. The indications here do have include the 9:30 settlement of the SPX AMs and then the end of day PMs, and that's the 25% that you're seeing over here. So we are seeing a lot of money get settled today, plus we have what you just saw on the previous screen getting settled out also at the end of the day. We closed right at what I would call a delta transition level at 3,900. You can see where the deltas are starting to turn green. Those are longer term, but if we dip into this area, I am expecting to get shot out through 3850 and position down towards 3800. You can see where the different gamma levels are here, and as we move down through here, we accelerate through these larger gamma levels. I'll note these are very significant levels of gamma, so just be aware of that. Something that's a little odd, we start turning into kind of a call-dominated gamma structure above us, and then it immediately reverts back to a put-dominated gamma. A lot of in-the-money are sitting out here at the 4,000. So any pressure upwards could be a potential to monetize and push us even higher. We came down here pretty quick this week, so I would not be surprised with a reversal, but I can also state it's pretty broken above us, so just remember that. You can see that visually here on this final chart. This should say 4,400, by the way. It's up here. 4,400's here, 4,300's here. This is the JPM short strike at 4,340. Relevant here, excuse me, 3,800, 3,900, 4,000. And there's that 4,005 JPM short calls, 46,700 of these, which expire at the end of the month and will get rolled. This has developed literally in the last day. It didn't exist yesterday. We closed right here above this 3,900 line. 39.75, you can see it's going to be kind of ugly in this area. We're back into a fairly dominant negative gamma area above that, and you saw what the deltas look like also. This is a really odd structure, and it's really ugly to make any progress to the upside. To the downside, like I was saying, below 3,800, we're not really growing. We're not, 3,800 just sticks out like a sore thumb. These are relatively the same magnitudes that we saw yesterday. And below 38.25, even though there is some gamma down here, we're not, or some open interest changes down here, we're not seeing any growth below 38.25, even though we've pushed down. So, the market expectation obviously is that we're not going to drop a lot, or if they felt we were, they would be putting some more short-term open interest down here. And again, we're not seeing it. So we think we're under hedged here to a certain extent. We think that 3,800 is absolutely a pivotal line. If we lose 3,800, I'm not uncomfortable at all saying lights out. There's not a lot of support as we come down through here. We would have to see significant amount of puts go in and be present as we penetrate these. If you see the puts going in as we fall, it's too late. We're going down. Adding puts as we drop is not a good course of action because it just begets more selling, and there's not the monetization capabilities down below here to protect profits. So just be aware of that. So that's it for today. If you have any questions, comments, suggestions for improvement, ask that you go to gammaedge.us. That'll take you to a blank sign-up page. Yes, we know the website is Spartan and blank. We are revamping it just to address your comments. Click on the pricing tab, fill out the blanks, come into the Discord. Right now everything's on the Discord, and 14-day free trial, all the tools turned on. Got a lot of good people there and a lot of good knowledge. Follow us on Twitter, Gamma Edges, and then here on YouTube, smash that like button if you want to give me feedback that I'm on the right track and providing the right information to you. And of course, subscribe, because Taylor posts every day his end of day summary, and very, very useful. And then Michael also posts, so I want you to be able to get notified when that happens. So with that, make it a great Friday, great quad witching period coming to an end, and make it a great weekend. Hope to see you in the Discord. Thanks, everyone.